Hi everybody, thanks for tuning in. Here are 5 key financial numbers that I think everyone should track. As I've mentioned many times before, I really do believe that when it comes to being financially organized, 20% is financial and the other 80% is behavioral. Part of the behavioral aspect of being financially organized requires having a good tracking system to monitor and review your progress. Here are 5 key financial numbers that I think every tracking system should include. Number 1, cash flow. Cash flow is simply the money you have left over after all expenses have been paid. It is calculated by taking your net income and deducting your monthly expenses. You want to make sure that your cash flow is increasing over time. There are only really 2 ways to do this. Either find a way to earn more or spend less. Cash flow is the secret ingredient needed to really get ahead financially. Finding a way to maximize your cash flow and then using it to accumulate income-bearing assets is the basic blueprint needed to generate wealth. Number 2, savings rate. Your savings rate basically tells you how much of the money you earn is actually working for you and not for other people. It's the total amount you save and invest monthly compared to the total amount you actually earn. The higher the percentage of the money you keep every month, the faster you will reach your future financial goals. Most people earn money and then use that money to buy more liabilities, which ultimately leaves your balance sheet in the form of monthly expenses. To generate wealth, you need to invest as much of your income as you can into income-bearing assets, which generate more money. This money then re-enters your balance sheet in the form of more income, which you can then use to invest in more income-bearing assets. Number 3, primary residence rate. Primary residence rate refers to the amount of your net salary you spend on all household-related expenses. This would include things like bond repayment or rent, plus utilities. Personally, I think we should strive to keep our primary residence rate lower than 33%. If you're spending more than 33% of your net salary on the roof over your head, then you're not really leaving yourself much to build wealth. Number 4, asset change rate. It's important to track the progress you're making in accumulating income-bearing assets. Remember, in order to reach financial freedom, your assets need to be able to generate a passive income that is higher than your monthly expenses. Let me give you an example to show you how to work this rate out. Let's assume your current income-bearing assets are worth 1.2 million rand. Let's also assume that the value of these assets 6 months ago was 1 million rand. To calculate this, simply say current value of assets minus previous value of assets divided by previous value of assets. Then multiply this number by 100 to get it into a percentage. You obviously want to make sure that this number is growing over time. The quicker it grows, the more financial traction you're making towards your goals. Number 5, passive income rate. The last key ratio I feel you need to follow is your passive income rate. This is simply the amount of passive income you receive monthly divided by your monthly expenses. As I stated earlier, in order to reach financial freedom, your assets need to be able to generate a passive income that is higher than your monthly expenses. Tracking how you are doing in this department can be a great motivator. To calculate this, let's assume your monthly expenses, not including investing, are 30,000 Rand per month. Let's also assume you have an investment portfolio of 2 million Rand. If we use a worst case scenario and assume that you could draw 4% annually from this money, then that would mean you could generate 80,000 Rand per year, which would be 6,666 Rand per month. Your passive income rate would be 6,666 divided by 30,000, which equals 22%. There are many more numbers to keep track of, but I think these are the most important to get you started for now.